Forex. At its core, the simple concept of converting one currency to another. But the jargon can be confusing until you get to know it. First, let's look at the instruments that you can trade. Forex is traded in currency pairs, because effectively you're buying one currency and selling another. The currencies themselves are represented by three-letter codes: USD for the dollar, EUR for the euro, JPY for the yen, and so on. The currency on the left is known as the base or primary currency. On the right, the quote or counter currency. Popular pairs such as the pound versus the dollar are known as major pairs. Those traded less frequently are called minor pairs. They include currencies like the Singapore dollar or the South African rand. Pairs containing emerging currency, such as the Mexican peso or the Polish zloty, are called exotic pairs. Traders also use several slang terms in Forex. For example, cable means the pound versus the US dollar. It refers to the original transatlantic cable between London and New York. You may hear names like loonie for the Canadian dollar, which has a picture of a loon bird on the coin. Then there's the Aussie, the Kiwi, and the greenback. The movement for Forex prices also has its own term. A one-point movement is called a pip. In most major pairs, this refers to the fourth digit, to the right of the decimal place. So, if the euro-dollar price changes from this to this, that's a one-pip change. One important exception is when the yen is the quote or counter currency. Take the pound against the yen. Here, the second digit is the one to watch. Any extra decimal places shown in the price are known as fractional pips or pipettes. Each one pip movement is worth a tiny amount. So, Forex is normally traded in standardized quantities called lots. A standard lot is 100,000 units of currency. Small investors don't often have access to such large amounts of money. So, many Forex providers allow you to trade using leverage. This is where you can open a rather large market position with a relatively small deposit, known as a margin. Your profit and loss are based on the full position, however, and your gains and losses could far exceed this amount. So, when trading on leverage, it's important to keep an eye on the downside risk. Those are a few of the basic terms you're likely to come across when trading Forex. There are many more to learn, but understanding these should give you a good start on the road to becoming a confident Forex trader.